Hello, trading is closed on May 23rd, 2019. We'll go over our calls. Yesterday we said the odds favored a gap outside of this range and we had a lower target. By the time I made the video and got off work, futures were kind of making this a gimme. But of course the call still worked and the reasons remained valid. That's why I like it when people give reasons behind the calls and not just make them after the fact. We have mixed signals today. Some are positive, some are negative. I'll cut to the chase and say the odds favor a gap outside the range tomorrow. And if the gap is up, which isn't a gimme at all, but if it's up over a certain level, we'll discuss, this has a chance of holding as a low. So this was the pattern with the early low. Here's your early low, late high, counter trend move in the middle of the day. It's normally a positive pattern. It's negative. We didn't close at the high or close to it, but that negativity goes away if we gap and promptly take out the high. Now the high, you have to use futures because this first 5-minute par here has the prices skewed because all the elements of the S&P don't open simultaneously. So futures price was 28.32 and a quarter, and if we gap over that, or at least trade over it promptly, there's a good chance that this low is going to hold, as we'll see. If instead we gap under this and under some support levels, we'll discuss. I still think we'd be close to support, but the whole argument falls apart. Tomorrow's pattern has the early low, doesn't mean you won't gap up first. Well, here's the MEJT signals. Said this rally was false, came back. Said this drop was false, came back. Nothing for tomorrow. Well, let's look at support. This was the prior low. Here's the TDST line. You can see how it held the support. Now support goes to a bar under the line. So even if we trade lower tomorrow, we're still at a support level. And it's important that here was a bar completely under the lower Bollinger Band. Here's a bar completely over it. It means that we're having less intense selling as we do the retest. Here's volume on the E-mini contract. Now because the E-micro has begun trading, these volume figures are going to be skewed, but you'll see how volume spikes tend to associate with at least short-term lows, and we certainly have a volume spike now. This is the general idea. We had the biggest point move on this day. It was quite oversold. I made a guess that was going to hold. So far it has held, and this is the retest. Some indicators like CCI are much higher on this retest, so it's at least plausible that that could hold. This is the Dow Jones Transportation Index. This has gone under that low. This is the Dow Jones Industrials. This hasn't gone under the low, so we have a Dow theory buy signal. It goes away if this low gets undercut. But if we start going up here, it's a legitimate divergence at the low. It might seem impossible a pattern like this could suddenly turn around, but it's exactly the same pattern we had at this last low. I can work at it, but I can talk myself into this being an ending diagonal triangle. If it is, and we've started up, we should promptly take out the high of the triangle. And if it isn't, then I've just read the pattern wrong, but at least it's one of the ways you can interpret this. If this is going to hold, which was my original guess, and that's A, and that's B, we could have gray wave C up without changing the overall negative pattern here. We've had support not only from the TDST line, we also have support from these MEJT figures here. So even if we go a bit lower, we're at a support level with a volume spike typical of lows. If we gap up and if we take out that number I mentioned in futures, I think there's a good chance this completes this leg down and we have a rally. But if we don't take that out, it's a negative pattern, and if we gap under this, we're still at support, but it kills the idea that the prior month's low is going to hold, and there was a lot going for that low holding. If we do gap under the low, there is support even at the 200-day moving average at about 27.76. So if we drop here under this low, it's not going to be pretty. But with conflicting indicators and a pattern which usually closes at the high and the inability to hold these lows, if we gap up smartly and take out 28, 32, 25 in futures, I think the chances are this is going to hold. At least in the short term, there could be a leg gray C up. We'll have to see how we open to be sure, and that's today's call.